Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Diara Badati with student number 2341-2060 from class AKT 233A. Today, I will present a brief explanation about capital market instrument in Indonesia. The capital market plays a vital role in a country's economy because it acts as a bridge between investors who have excess funds and companies or government that need funds. In Indonesia, the capital market operates under the supervision of the Otoritas Jasa Keuangan, and transactions are facilitated by the Indonesia Stock Exchange. Various instruments are traded in the capital market, each offering different levels of risk and return depending on the investor goals. Capital market instruments refer to all forms of securities or financial assets traded in the capital market that represent ownership, debt, or other financial rights. These instruments allow investors to allocate their funds into productive sectors and enable users to obtain long-term financing. In general, capital market instruments in Indonesia are divided into equity instruments, debt instruments, and derivative instrument. Each type serves a unique purpose and has distinct characteristics that appeal to different types of investors. The first and most well-known capital market instrument is equity, or stock or saham. A share present ownership in a company. By buying shares, investors become part owner and are entitled to a portion of the company's profit in the form of dividends, as well as potential capital gains from price appreciation. However, stock investment also involves higher risk due to price fluctuation. In Indonesia, stocks are classified into two types: common stock and preferred stock. Common stockholders have voting rights at the general meeting of stakeholders, while preferred stockholders face a fixed dividends but typical lack voting right. The second type of instrument is debt instrument, better known as bonds or obligasi. Bonds are securities that represent companies or governments' debt to investors. When an investor buys a bond, they are effectively lending money to the issuer in exchange for periodic coupon payment and the return of the principal amount at maturity. Bonds are generally less risky than stock, but their returns are also more stable and predictable. In Indonesia, there are various types of bonds, including corporate bonds, government bonds, and municipal bonds issued by local governments. Another important instrument is the mutual fund or reksadana. Mutual funds are collective investment systems where funds from many investors are pooled and managed by an investment manager. This instrument is suitable for a small or beginner investor because it offers diversification and professional management. There are several types of mutual funds in Indonesia, such as equity funds, fixed income funds, balance funds, and money market funds. Each type differs in risk and return characteristics, allowing investors to choose based on their financial goals and risk tolerance. The next category is derivative instrument, which derives their value from underlying assets such as stock, bonds, or indices. Common types of derivatives in Indonesia include warrants, a naik issue, and stock option. A warrant gives the holder the right to buy shares at a certain price within a specific period, while a right issue allows existing stakeholders to purchase additional shares before they are offered to the public. Derivatives are considered high-risk instruments, often used for speculation or hedging. Indonesia also has a rapidly growing Islamic capital market, which offers sharia-compliant instruments such as Sukuk and sharia mutual funds. Sukuk are similar to bonds but structured according to Islamic law, which prohibit interest instead of paying fixed interest. Sukuk provide return but on profit sharing or asset ownership. The development of the Sharia capital market aligns with Indonesian role as one of the world's largest Muslim majority countries offering ethical and faith-based investment alternatives. That concludes my explanation. Thank you. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.